All right, good morning, Advantage members. Happy Friday. It's December 16th, just a little bit after the US session open. Couple of interesting things to talk about, right? Because, of course, in the overnight session, we saw a pretty sharp drop off right here in BTC. That's a almost 2.7% drop, coming back pretty much, right inside that weekly open that you could see that level right there. You could look at the weekly candle right now. I mean, this gives you a better idea. Like things, obviously do not look good on BTC. That's a very, very ugly weekly candle shaping up right now. Earlier on in the week, of course, you guys remember that we had the CPI pop right here. This was on Tuesday. And then Wednesday was the FOMC meeting with Jay Powell, which we had also initially popped for, but then we pretty much sold off most of the day. Following up on that day, we then sold off more yesterday. And then, of course, today we sold off even further. What this, tells me right now is, of course, the market is weak. And, any bit of a reason that you get to sell the market or sell into the market will happily take it. And bigger participants are still clearly, very, very on edge, not willing to sort of blindly bid the market, especially given the fact that if you look at the FOMC, news from Jay Powell, right, the talking points and everything, I think that people are talking about, they said, oh, it was a dovish meeting and Jay Powell is going to pivot and this and that. I think everybody's been talking about the pivot for a while. And I think for the most part, like almost everybody has been wrong, because what Jay Powell's doing is, what they call Fed speak, right? Which is they will talk very hawkishly, and at the same, in the same sentence, they will say, well, we don't want to be too aggressive and destroy the economy and this and that. But they'll definitely say like, hey, we're okay with putting the economy through a recession because we believe we know how to get out of a recession. But inflation is clearly the biggest, proponent for us hiking rates. And so, getting inflation down is their main priority. And I think, one thing that you'll see from everything that Jay Powell has said pretty much the entire year is that, inflation is their priority. It doesn't matter, how much they have to raise rates. Even if they destroy the economy a little bit, if they tighten up the labor market, meaning people lose jobs, and even if the stock market goes down, they believe that it is their fundamental duty to fight inflation, because that is the priority. And they believe that inflation can be very sticky and it can truly, truly ruin economies and entire, democracies if inflation is not fought. Okay, so I wanted to make that clear. And so whatever people took away from Jay Powell was the positive points. And of course, again, the market was, I think, already kind of due for a pop. Like it was already ranging in this area right here, for almost like 2-3 weeks before the FOMC meeting, before the CPI. And of course, once it popped, right, like it just took out a bunch of shorts up here. And of course, it could not sustain the bid pressure, meaning the long side, to push higher, because it just, when you hear stuff like this, embrace the pain, and Jay Powell basically saying we'll keep rates higher for longer, it effectively means like, the market is clearly not pricing in the risks, appropriately. And of course, so the market sold off. Now, that brings us to where we are today, which is, well, what does that mean for us, right? Like, what does that mean for us, in the BTC front, in the crypto front? What does that mean for this whole echo bubble conversation that's been going on, in December, right? I know people are talking on Twitter about echo bubble. I even reiterated this right here. I talked about, first of all, why exactly you need to think on the bullish or the long side of the market versus constantly thinking, there's a next leg down, right? Because personally, I think there's already a few pieces of criteria that are developing from the macro front. I'll let you guys do research on this on your own to, show us that, okay, the market, especially in crypto, could trade higher simply because these dominoes are falling into place, right? Or these cards are falling into place rather. And if that's the case, well, then we know that CPI is also locally, started to come down over the past few months. Again, it's extremely high. There's nothing to be excited about a 7% CPI. But the market, in my opinion, right now cares about a declining month over month, year over year CPI, which is happening. We also have the major events behind us. Sam Bankman-Fried is arrested, FTX has collapsed, Genesis, DCG, and Binance, FUD. Is it really FUD? I mean, it seems like it so far, because clearly neither of, the companies have gone bankrupt. They haven't begun selling. They haven't, filed for Chapter 11, all that jazz, right? And then, of course, I look at certain key aspects of how the market us. Well, it tells me that even with